Still waiting. This is a slow process this morning. Hopefully everybody's got something good planned this weekend. Not me. All right, almost. All right. We finally got there. Let's start with the strategy. This is called a liquidity gap. I've seen other places call it something else, but at 8:30, we're going to get an economic report. This one happens to be non-farm payrolls, NFP. What we're looking for is a single direction push. It can go down, it can go up, we don't care. After it makes that initial push, we want to see it do a little bit of a basing pattern and then spend the morning working its way back from where it started. So you can see by 11 o'clock, price made it back to where the event started at 8:30. Now you might be looking at this and saying, yeah, okay, it happened once. So, well, here's a different one. We went up instead of down. We spent the morning working our way back down to where the gap started, and we got there around 11 o'clock. Okay. These are all from this year, by the way. Some is from CPI, some is from PPI, some is from non-farm payrolls. So here's another one. 8:30 data print, CPI. We worked our way back down to where the gap started, got there around 11 o'clock. Starting to see a theme there. Yep. So here's an example of when it doesn't work, because no strategy works every time. And it's exactly what we don't want to see. And we would never have traded this, so we didn't lose any money. It was never an issue. Notice there's big wicks on each side of the print. Well, that doesn't look anything like the other examples that I just showed you. So if we get the economic data this morning and we get a big wide candle like this with wicks on each side, there's no trade. So what, right? Like we still got the other things that we normally trade on a day-to-day basis anyways. So we just don't have this one and we move on to something else. Another example of the same thing, kind of looks like it's the same picture. So let's find this one. I didn't even bother to mark out, but you can see how it's really wide on each side. And we would just scratch it, right? Like the trade is done. And it doesn't matter that price did go back to that spot. It doesn't matter to me anyways, because that's not what the strategy is supposed to do. It's not supposed to be this big wicky candle on each side. Same thing here, big wicky candle on each side. That's just, there's no trade there. That's not what we're looking for. So pretty simple, very straightforward. We're looking for a single directional push and then some basing as we get into the RTH session. And then we work our way back down to that starting point by 11 o'clock. Now, me personally, I usually wait until we're in the RTH session, but I have been known to take some of the trades before then, because this is what I call a destination trade. You already know where we're going, right? Going down here. And we might take different paths to get there, but when you know the destination, you can keep coming back in and trading in anything that gives you the setup that you want. Liquidity gap. Cool, cool. So now that we've got that out of the way, let's do our normal morning briefing. All right, kind of a mixed bag around the world. Hong Kong is up. I didn't get a chance to look this morning, but you want to see if they're doing more of that subtle stimulus. Japan behind that, and then the Russell. I continue to stress, keep your eye on the Russell. Think about January, February, March of this year, right? When that dash for trash craze started picking up, the long forgotten short squeeze, all of that, right? The NASDAQ is down the most at 0.25%, which makes sense because Apple's down. Last I looked, it was down 3%. And that makes sense because when we were evaluating Apple yesterday, its average move after earnings is, wait for it, 3%. We do have a lot of Fed speakers. The game that you want to play this weekend with all of these Fed speakers is what's the new narrative? They're all going to try to stand on their own, to speak as if they are their own person, but they're just being manipulated, right? Somebody else is pulling the strings. So we want to know, what is the hymn book? What's the unified message? So far as we know, it's high for long, right? Not higher, implying they're not going to raise again, but they're also not going to cut. As you can see for today, it is a very large list of economic data. This is also on the kind of day where the White House will wait until near the end of the day, and then they'll dump news on us at the last moment. It's not this White House, right? It's every White House will do that. So we want to be on the lookout for any news going into the weekend. The moves today have the potential to easily eclipse FOMC, because with FOMC, we already knew what was going to be said. With this, we don't know the numbers. So a really busy day. If you have been sitting out all week because of FOMC and everything else, then you've got one more day. I would encourage you to sit out this day as well, and then start fresh next week. On the week, we've had an amazing move. We are completely outside of the previous week's range, and we're focusing on that 50% mark of the week before that. Because if we're going to work our way back up through these levels, then we've got to do it one piece at a time, right? Pure price method. We've got to start cutting up back through these levels until we finally get back to the top. And it's going to be a process, right? One stage at a time. At the moment, we don't have yet a higher high, and we don't yet have a higher low. So the downtrend is still intact. The thing is, when we flip over in a trend, it is identified from the smallest time frame up. And so we would be the last to know if we're looking for it on a weekly. It's worth noting all of these wicks here, because as generic as that feels, you didn't have to buy some special program. You don't need, a master's degree in mathematics. Those two wicks right there tell you that there's a ton of sellers right there, and we don't know if they're done yet. It really is as simple as that. So the expectation is when we come into that zone is that we're going to see elevated selling at that level. We should see it on the tape, which is how I trade. We are at the 10-week moving average this morning. We have an MDP, which is a missed daily pivot. We had one yesterday, which is in effect now today. If we hold this one today, then that'll be 2 MDPs in a row. We're still really extended from this weekly pivot point. So as much as, other tools aren't telling us that we are overbought, we are overbought. That's a very long distance from the weekly pivot, but it resets every week. So when we come in next week, we're going to have a weekly pivot much closer than where it is now. So price doesn't have to mean revert back down to the weekly. All it has to do is hold these highs and the weekly will come up to it. And the volume, yeah, it's a little light this morning, but that makes perfect sense because we have economic data on the table and we've got a market maker move, which means they're concerned, they are worried, and they are hedging their positions. This isn't my assumption. I'm not taking guesses here. That's just fact. They are hedging. It's only 0.5%. Our average daily range is 1.5%. So if we put those two together, we're talking about a 2% move on the day. And that wouldn't even be considered an outlier move. That would just be another day at the office. So we'll just use this yellow line. That's the full ADR. And we'll add 0.5%. 44.11, the cog line. Imagine that, right on a cog line. So we could go there, and that would just be another day. What if today gets a little wild? Then we can take that 2%, cut it in half, and add it to it. That just means in total, we'd have a 3% move today. So instead of measuring this only 0.5%, let's measure it an entire percent. $44.34. There's a cog line at $44.32. So I'd say we just lean into that. $44.32. That is impressive. Both cog lines. Now that's an upside move. And again, we're not even reaching. If we have a blowout day, we can move 4%, no problem. But we're trying to keep with the math, right? So let's do it the other direction. We went up. Now let's go down. 0.5% from this yellow line. $42.43. And 1% from that yellow line. $42.22. Okay. And we can deal with that. It basically puts us right into Wednesday's price action. Cool, cool. We can handle that. We do have a bit of a Wyckoff, right? Distribution, basing, accumulation. This isn't really the time frame for it, but it's just nice to see price is behaving the way it's supposed to. And we do have a lot of support underneath this, although it's ancillary, right? Support and resistance is an antiquated term that only works in the past tense. So things got supported or things were resisted. When we're looking ahead into the future, it's possible support, potential resistance. It's not really support and resistance. So when we look to the downside, the daily pivot point, the ADR half, the 20 period moving average, the 10 period moving average, the full ADR, all of those are pivot points where we would stop, digest, we'd likely see trading, and it could be enough right there to turn things back. But we wouldn't consider them support and resistance. At some point, when you outgrow those terms, you'll do so much better. So we made it through the point of control, 10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. Oh, gee, hey, imagine that. We were at the lows, and hey, we're at the highs. Now, if you've been watching this every day, you know that that wasn't the high yesterday. Even when we ran up there, there was still price to our left that had this profile taller than it is now. But as the day wore on, the profile lost all these candles from the left side. And now this became the top. So we didn't run to the top of the profile, hit it, and pause, right? That's what it looks like we did. But remember what it looked like yesterday. There was candles higher up there, right? Either way, we're above the point of control. So any move to the downside that we were already discussing is going to have to negotiate with that point of control. And you can see yesterday where the greatest amount of volume, where the point of control is, we struggled Thursday around that level before finally getting past it, through it, and on up. There is already a lot of volume building up at this level. And we really haven't spent very much time there yet. We don't have a classic shape. If I was to give this a name, I would say it's a classic D, as in dog. But it's pretty ugly. And an unclear pattern is more dangerous than a clear one, right? You're better off just not leaning on the pattern at all. All right, VPOC, we got into one yesterday. This has been around for a little while, 43.29.5. You can see how price responded to it yesterday. It didn't really offer a first touch play. And we're done with it. I believe that we do not have a VPOC for today, but I'm going to set it up there and put it into place first, and then we'll talk about why I'm going to keep it. So there's two things about bringing forward the point of control. If you read the textbooks, they'll say, oh yeah, carry the high, the value area high, the value area low, and the point of control into today's trading session. It doesn't matter if they've been hit yet or not, just carry it forward. And okay, I suppose, but I've already got enough pivots, and my pivots are usually much better and actionable as opposed to this, which is more arbitrary, right? That they don't have, at least the value area high and low is arbitrary. So unless it is something different than a regular point of control, I don't really want to carry it forward. A VPOC means it has not been hit yet. We haven't gone back to the place where the most volume happened, where the most transactions happened. And I want to know where that location is, because if we do go back there and we have not yet gone there, the expectation is we're likely to see elevated volumes, a lot of trading at that level. So it has merit. I understand at that point that I get something out of it and I use it. So I put it on the chart. But once we've crossed through that level a few times, like we have in the overnight hours, it's no longer a VPOC. It's now been hit. We've gone through that area. The expectation that there's unfinished business at that level now is greatly diminished. So I'm going to keep it on my chart through the day today anyways, just because, I still want to see what more we can get out of these different tools. But as far as the VPOC goes, it's been hit. It's no longer a valid VPOC, and you shouldn't mark it if you're looking to carry forward those VPOCs. I'm going to keep it on the chart for today just as a POC, just as a regular point of control. Cool, cool. Bitcoin is down 2.25. And of course, tech is down because of Apple. Nat gas is down. Things that are up, the China ADRs, KWeb constituents, so BABA, Baidu, JD, PDD, maybe NEO, or Li Auto. But that's it, right? We've got China up and Bitcoin down. If we wanted to dig a little bit deeper and maybe take a look at pot stocks, well, we got crude too. So at USO, maybe a little bit of a reflexive bounce there. And we have the pot stocks. So there's MSOS. It's not getting a lot of flows yet, but it is up a little bit. So all eyes are on the econ data, which makes perfect sense. We got to get through that to see what kind of a day we're going to have. And long and the short of it, that's a wrap. It won't matter what's up this morning or what's down this morning. Once we get non-farm payrolls, they could change places. Or what I'm looking for, a rising tide scenario. I want everything, all 11 sectors, 99 out of 100 names, all moving up or all moving down. And if you're thinking, yeah, right, when do we get that? Oh, we've had it before. Yeah, and those are the days that really move, right? When you have every single sector and industry and name all moving up or down, I don't care. I'll trade it either way. That's when we run the alpha protocol, right? It's been a long time since we've ran that. I would like to do it again. That's what I got for you guys. Watch the news, use Finance Juice. It's a great resource for that through the day. It's free. And watch the clock. Have a good weekend. I will see you all